My friends, I need you to stop whatever you're doing right now, because what I'm about to share with you in the next few minutes could directly affect how much money lands in your bank account. Not next year, not 6 months from now, but starting this very month. If you're receiving Social Security retirement benefits, SSI, SSDI, or if you're a veteran getting VA payments, there have been some very important changes to the 2026 COLA projection that not enough people are talking about. And I promise you, by the time we're done here today, you're going to understand exactly what these changes mean for your check, your budget, and your future. Now, I know how it feels to sit down at the kitchen table with a stack of bills, a fixed income, and wonder, is it enough? Is it going to be enough this month? I hear from people every single week who tell me they're rationing their medication, skipping meals, or dipping into savings they never planned to touch. And that breaks my heart. Because the truth is, the government has made adjustments to the way your benefit is calculated, and if you don't know about them, you could be leaving real money on the table. So stay with me. Let's go through this together, just like two old friends sitting right across from each other. First, let's talk about what COLA actually means for you. COLA stands for Cost of Living Adjustment. Every year, the Social Security Administration uses inflation data, specifically something called the Consumer Price Index for urban wage earners and clerical workers, or CPIW, to figure out how much your benefit should go up to keep pace with rising prices. In January 2026, a 2.5% COLA adjustment officially went into effect. Now, that might not sound like a lot, but let's put some real dollar amounts on it so you can actually feel what that means. If you were receiving $1,800 per month at the end of 2025, that 2.5% increase added approximately $45 to your monthly check, bringing you up to around $1,945. If your benefit was closer to $12,200, you would have seen a bump of about $55, taking you to roughly $2,255. And for those of you who were already at the maximum Social Security retirement benefit, which for someone who retired at full retirement age in 2026 is $4,018 per month, that's a meaningful amount of additional income every single month. But here's where things get a little more complicated, and this is what I really need you to hear. The COLA projection has shifted, and here's why April matters. When the Social Security Administration announced the 2.5% COLA back in October of 2025, they based it on inflation data from the third quarter of last year. But inflation doesn't stop moving just because the government made a projection. And in the early months of 2026, the economic picture has been shifting in ways that directly affect you. Here's what's happened. Inflation in early 2026 has been running differently than what the projection anticipated. Grocery prices, prescription drug costs, housing expenses, these are the real-world categories where seniors feel the pinch the most, and analysts and economists have been watching the data closely. Some independent projections for what the 2027 COLA might look like are already being adjusted based on what's happening right now in April 2026. Some early estimates are putting the next COLA adjustment anywhere between 2.3% and 3.1%, depending on how inflation data plays out over the next few months. Now, why does April matter so much? Because the second quarter of the year, April, May, and June, is when the CPIW data that feeds into next year's COLA calculation starts to get locked in. The numbers being recorded right now, the prices being tracked at grocery stores and gas stations and pharmacies across America, those numbers are going to determine how much your check goes up in January 2027. So April is not just another month. April is the beginning of the window that shapes your future benefit. What about SSI recipients? Let's make sure you aren't left out. I want to make sure I'm speaking directly to our friends on supplemental security income because the rules are a little different for you and it's easy to get confused. The maximum federal SSI benefit in 2026, after the 2.5% COLA was applied, is $965 per month for an individual and $1,250 per month for a couple. Now, some states add a supplemental payment on top of that federal amount. So depending on where you live, your total SSI check might be a little higher. But here's something a lot of SSI recipients don't know, and it genuinely concerns me that so many people miss this. If you have even a small amount of earned income, or if someone in your household earns any money at all, the SSA applies something called an income exclusion before they reduce your benefit. The first $20 of any income you receive each month is generally not counted against your SSI benefit. And the first $65 of any earned income, plus half of anything above that, is also excluded. So if your adult child gives you $50 a month to help with groceries, that might not affect your SSI at all. But you have to report it correctly to avoid an overpayment, which brings me to the next thing we need to talk about: overpayments, clawbacks, and how to protect yourself. One of the most stressful letters any Social Security recipient can receive is an overpayment notice. This is when the SSA determines that you received more money than you were entitled to, and they want it back. Sometimes these overpayments happen because of unreported income. Sometimes they happen because of an SSA data error. And sometimes they happen because of changes in your living situation that you didn't realize you needed to report. Here's what you need to know. In 2025, the SSA made some significant changes to how aggressively they pursue overpayment recovery. For a period, they had announced they would withhold 100% of a person's monthly benefit until the overpayment was repaid, which was devastating for people living paycheck to paycheck on a fixed income. After tremendous public outcry, the agency pulled back on that policy. As of now, the default withholding rate for overpayment recovery has been set at 10% of your monthly benefit, which is far more manageable, but you have to request it. If you get an overpayment letter and you don't respond or appeal, you could end up with much more than 10% being withheld. My strong advice to you is this: if you ever receive a letter saying you were overpaid, don't panic and don't ignore it. Call the Social Security Administration at 1-800-772-1213 and ask to set up a payment plan, request a waiver if you believe the overpayment was not your fault, or file an appeal if you think the amount is wrong. You have rights. Use them. SSDI recipients, the substantial gainful activity limit. Just changed. For those of you on Social Security disability insurance, there's an important update you need to write down. The substantial gainful activity threshold, the amount you're allowed to earn from work without jeopardizing your SSDI benefits, has gone up in 2026. For non-blind SSDI recipients, the SGA limit is now $1,320 per month. For those who are blind, it's $2,700 per month. This is important because some of you may be doing a little part-time work to make ends meet, which is completely understandable. But you need to make sure you're staying under that threshold. Going even $1 over for multiple months can trigger a review of your benefits and could put you at risk of losing your SSDI. And for people who are thinking about going back to work and trying out their ability to work, something called a trial work period, the monthly threshold for that is now $1,110. During your trial work period, which lasts 9 months, you can earn more than that amount and still keep your full SSDI check. But you only get those 9 months, so be strategic about it. Veterans. Your VA benefits also got a COLA boost. I never want to leave our veterans out of the conversation because millions of seniors are receiving both Social Security benefits and VA compensation at the same time. The good news is that VA disability compensation also received the same 2.5% COLA increase effective December 1st, 2025, meaning it showed up in your January 2026 VA payment. For a veteran with a 100% disability rating and no dependents, the monthly compensation rate in 2026 is now $3,131.30. For those with a 70% rating, that's $1,716.28 per month. And for veterans at lower ratings, 10%, 20%, 30%, or 50%, all of those amounts have been adjusted upward by 2.5% as well. Now, here's something I want every veteran on both VA compensation and Social Security to understand. These two benefits are not means tested against each other in most cases. Receiving VA disability compensation does not reduce your Social Security retirement or SSDI benefit. You can collect both at full rates simultaneously. That is real money that belongs to you, and you should not leave it on the table. However, and this is important, if you're receiving VA pension benefits, which is different from VA disability compensation, there are income and asset limits that could affect your eligibility. VA pension is a needs-based benefit, and income from Social Security counts toward that calculation. So if your income situation has changed, I'd encourage you to reach out to your local Veteran Service Organization or VSO to make sure your VA pension is still being calculated correctly. Tax implications. Will your increased benefit be taxed? Let's have a quick but honest conversation about taxes, because I know this catches a lot of people by surprise. Not everyone pays federal income tax on their Social Security benefits, but some people do. And the COLA increase can actually push people over the thresholds that trigger taxation. Here's how it works. If you file your taxes as an individual and your combined income, which includes your adjusted gross income, plus any tax-exempt interest, plus half of your Social Security benefit, exceeds $25,000, then up to 50% of your Social Security benefit could be subject to federal income tax. If that combined income exceeds $34,000, up to 85% of your benefit could be taxed. For married couples filing jointly, those thresholds are $32,000 and $44,000 respectively. So here's the thing. With the COLA increase pushing your monthly benefit up, if you're right near one of those thresholds, you might find yourself owing a little more at tax time than you expected. The way to get ahead of this is to talk to a tax professional, or even use the free AARP tax aid service if you're on a tight budget, and consider whether you want to have a small amount of federal taxes voluntarily withheld from your Social Security check each month using IRS Form W4V. That way you're not hit with a surprise bill every April. Maximizing your benefit. Smart strategies you should know about. Let me share a few strategies before we wrap up, because this is where I want to make sure you're walking away from this video with actionable steps. If you're still married and one spouse has a significantly higher Social Security benefit than the other, think carefully about when each of you claims. The higher earner delaying until age 70 can result in benefits that are 24% to 32% higher than claiming at full retirement age. And the surviving spouse inherits that higher amount when the first spouse passes. That's one of the most powerful financial moves a married senior couple can make. If you're divorced after at least 10 years of marriage and haven't remarried, you may be entitled to up to 50% of your ex-spouse's Social Security benefit, without it affecting their benefit at all. Many people don't know this. Many people who should be claiming this benefit never do. If that might be you, please call the SSA and ask. And finally, don't forget about the Extra Help Program, formerly called the Low Income Subsidy, for Medicare prescription drug costs. If you're on a limited income, this program can save you thousands of dollars a year on your medications. In 2026, a single person with an income below about $22,590 may qualify. It's connected to your Social Security record, and it is worth looking into. Closing, you deserve every dollar you've earned, my friends. You have worked hard. You have paid into this system for decades. You raised families. You built communities. You served this country. And these benefits are not charity. They are yours. You earned every single dollar. The changes happening to COLA projections in April 2026 matter because they are setting the stage for what comes next. Stay informed. Watch these numbers. And please share this video with someone you love who is also on Social Security, SSI, SSDI, or VA benefits, because the more we look out for each other, the better off we all are. If you have questions, drop them in the comments below. I read every single one. And if you haven't already, hit that subscribe button so you never miss an update that could affect your check. We'll see you in the next one. Take good care of yourself. God bless.